Welcome to Fridays with Fintellect. My guest today is Shauki Awash, Head of AML CFT and Sanctions Unit at the North Africa Commercial Bank based in Beirut, Lebanon. Shauki, welcome to Fridays with Fintellect.
Yeah, good morning. Thank you for having me and looking forward to future meetings as well online.
Absolutely. So, Shauki, at the outset, can you give our listeners a quick overview of your career so far in the world of AML CFT?
Yeah, I'm a career banker with 20 plus years of experience. For the last 10 years, I've been assigned an MLRO at my current institution, heading the AML CFT division and sanction division, actually. And in parallel, I'm a bit dynamic on the AML CFT front. I've been involved in several consultancy training for building capacities across East Africa, the MENA, GCC. Also, I'm a lecturer in Beirut. I give one of the courses accredited by the CISI, which is the Chartered Institute for Security and Investment London, for combating white-collar crime and financial crime. Basically, that's it. You know, AML, you have to be always a step ahead, whether on the academic or on the professional level.
Absolutely. So, nice to hear about your career journey so far. So, you've got a lot of experience in the world of financial crime compliance. So, what would you say, what is the sort of evolution you have seen within the AML compliance profession, actually, and what are the developments that you feel you would applaud? And is there anything you see that worries you?
Yeah, Cherish, AML CFT hates constants. So it's such an evolving field, whether in financial crime, in sanction, in tax evasion. So things keep, going in a fluid like trajectory. So basically, the basic evolving feature that has happened lately is seen in the technology area, like the AI, the machine learning, which has changed the way we onboard, we profile, we monitor. Another thing is that even on the sanction front, we have seen how sanctions are getting very smart and laser focused or targeted. A couple of examples is seen in the sectoral sanction identification, targeting basically Ukraine, Crimea for the oil and construction sectors. Also lately, the advent of the Global Magnitsky Act has made a paradigm shift in the way we screen our clients, which basically cover the corrupt actors and those who are involved in a human right abuse. So, and we have seen this unfolding lately under the Cuban sanction regime. In Cuba, there is a lot of like oppressing the opponents, the peaceful demonstration, and the OFAC keeps like issuing a new sanction targeting the Cuban regime. What worries me, there are a lot of worries. There is a lot of worries. First, I'm always afraid about the work and the humanitarian mission or objective of charities. They work in conflict zones, and because these conflict zones are sometimes under sanctions, like let's say currently we have Syria, Yemen. So vulnerable people are in need of this unfettered flow of assistance, and some banks stop the transaction or refuse it based on or rationalize this by a fear from sanction risk. So this calls upon banks to be more knowledgeable and have a more profound knowledge about sanctions, so they keep this aid flowing to a conflict zone. Another thing is de-risking or wholesale de-risking while keeping basic sectors needed outside the banking community, like opening the way for a parallel economy. Also, as far as we are concerned as professionals, some institutions are still like hanging on to the fixed mental model where we focus on money laundering crimes only, like leaving the other 20 predicate offense like human trafficking, bribery, tax evasion, counterfeit goods. So it's not only money laundering. So basically, this is what worries me. And just a couple of things on what is positive. Besides technology, it's the financial inclusion milestone achieved lately, and the private-public dialogue, which is leading to crack down on more and more criminal cases.
Right, right. Very well said, Shoki. I think you touched on some very relevant points. So there has been a lot of discussion about this apparent gap between a technically compliant AML program and the actual effective identification and mitigation of MLOTF risks. Now, I would like to ask you about your view on two issues that are capable of tilting the scales in favor of effectiveness. So one, I think, is better risk assessment, and the other is possibly supplying the regulator or FIU with timely, accurate, and actionable suspicious transaction reports or SARs or STRs. Do you think banks are geared up in terms of data or processes or technology to provide the best results on both of these issues, that is risk assessment as well as STRs?
Yeah, this is a multifaceted question, and let me first say that the owner or the pioneer of this categorization, whether the effectiveness or the technical issue, i.e., technical compliance or effectiveness on the compliance, it is the FATF, which is the Financial Action Task Force. Because as you know, when they do the mutual evaluation on each jurisdiction, they follow a two-pronged approach. They assess the technical and the effectiveness. Technical, now we will get more into depth about what's technical, but just briefly now, a technical is that a certain recommendation is transposed into a law, that you have a law, but does not mean it's effective unless you enforce the law. And here, let me sound a bit anecdotal and share with you a story which was told by one of my university professors in the business school. It's very relevant and pertinent in this discussion when he was comparing the total quality management, the TQM, and the ISO standard. ISO is a tick box approach, and you still can like design or create a cement life jacket, even if it can drown you and not save you. You just follow the steps. However, TQM or total quality management is about doing the thing right from the first time while maintaining the value proposition of the product or towards the customer. So basically, this is the difference. And to reach the effectiveness or to have the scale tilting, as you mentioned, in favor of effectiveness, we should like have a separate risk assessment for sanctions and another one for AML, because what may be a high risk under sanction may not be the case under money laundering, and vice versa. Another issue is to ascertain that we have quality data so we can reduce the frequency or the high ratios of false positive, which we keep on digging in, but they are not material or they are not real alerts within the financial crime. So the better the data, the less the false positive ratio. Another thing for STR, I mean, we are trained, or throughout the discussion, the reading, the training we do, that we should not be like prone or have the tendency to file defensive STR, which are usually low in quality. We have to go for quality STR, providing the regulator with the predicate offense as much as we can, a good narrative, an elaborate narrative, the profile of the client, the circumstances of the transaction. And this serves the objective of the FIU, or the Financial Intelligence Unit, because you are contributing to building a real database for the regulator, because they will be soon issuing or giving out to the reporting entities the typologies for which we build our risk national assessment, and we know where the financial crime risk is concentrated.
Right, right. You know, Shopee, we can't have any conversation these days without mentioning the pandemic. And, you know, as you know, the COVID-19 pandemic has actually put uh, financial crime even more front and center. You know, what would you say is the degree of collaboration currently being achieved within banks and financial institutions to combat money laundering, fraud, and cybercrime? And, you know, is there anything more that can be done?
Basically, the fact that now we're having this online interview or meeting maybe resembles, even indirectly, how the pandemic has changed the way we live, or that it has onboarded or landed us in the new normal. Basically, Sharish, yeah, we have seen an epic shift in the way we run financial institution and do compliance in the post-pandemic era. So it has led to unprecedented global challenges, human sufferings, and travel restriction. Also, this has led many banks to restrict their face-to-face or to the day-to-day activity with the client, opening the way for online, let's say, onboarding, online platform for doing the transaction. And all this has opened like a big window for the criminal to penetrate us, and began being so creative on the financial crime front, either to launder the illicit proceed, or the terrorists to fund or finance the malign activities. So we are facing a real challenge and threat. Also, the demand for COVID-19 accessories or medical supply, from vaccine to ventilators to what we call the PPE, the personal protective equipment, have opened also the way to email scams. For example, we have seen across the industry, like the hacker sending a phishing email for an importer, asking him to pay for the supplier, and the importer unwittingly will go to the bank, make the order to supplier. Then the real supplier will pop out saying, "Where's my money?" And he will say, "I already have sent you." It happened to be a real scam, and here the financial institution have the obligation to report such incidents. Another is like deceiving a victim by having their ATM card, because they are under confinement, and maybe someone will try to break this curfew and just to steal the money of the victim. Another issue is convincing the victim of offering you like the POA or the power of attorney over the account due to confinement. So all these have been, or have make a big buzz on the banking floor, or a wake-up call to take proactive measures. We are seeing how FIUs, supervisors, law enforcement agencies working together to pinpoint this risk and share guidelines with the private sector. Banks are trying to sensitize the client about cyber attacks, about hacking, how to protect their personal data in a better way. Another issue is in upgrading or reskilling the skills of the frontline staff which are in direct contact with the client, whether online or in person. So they try to detect these anomalies and aware the clients of online and cyber risks. And also we can add here the impersonation of identities, identity fraud, etc. The list goes on.
Right, right. So, Shauki, the other thing which is, top of mind for everyone today is cryptocurrencies and virtual assets. So, what has been the impact of this within Lebanon? I mean, are there any specific AML risks that you're seeing within the bank due to virtual assets or crypto? And what is the current regulatory stand there?
Yeah, frankly, the cryptocurrency or virtual asset are still in nascent stage in Lebanon. They have not yet developed to compete with what's going on in the region. If we talk about, let's say, Dubai, UAE, Saudi Arabia, they are much advanced. Yet, regardless of this, the central bank has promised or said in a statement that they will be soon issuing their CBDC or the central bank digital currency, which is a bit different than the crypto we know. However, in all cases, we are still vulnerable to crypto risk or virtual asset risk in the sense that Lebanese, whether resident or living abroad, are interested in trading and like dealing with cryptos, which make the sector vulnerable to this, especially when the accounts of a certain client dealing with cryptos is used to either place or layer some kind of funds emanating from liquidation of a certain virtual asset, whether also we have an incoming SWIFT payment, let's say done by Wirex, which is an intermediary for to transfer from crypto to fiat money. Banks in Lebanon, I can tell you, may refuse and reject such kind of payment because there is no yet clear guidelines about the crypto. So it's something that is still at the beginning, and it's a long way down the road.
Right. So, Shauki, the UAE has also introduced new AML legislation recently. What do you think are the main changes brought on by this law? And do you think there's going to be an impact within the region? Do you think other Arab countries will follow suit?
Yeah, basically, what's happening or what has been unfolding in UAE, like starting 2021, has brought UAE to the spotlight. A couple of events like happened in tandem, Cherish there. First, beginning this year, there has been very heavy and harsh fines levied on 11 UAE banks for deficiencies in sanctions and AML programs. So they have about like 46 million AED in penalties against 11 banks. So this is one issue. Another issue, because before going deep into like the highlights of the new AML law in the United Arab Emirates, let me allude a bit to the latest mutual evaluation issued by the MENA FATF for the UAE and share with you some of its findings, because that was the trigger for the AML law, the shortcomings in the evaluation. So basically, it was found that TBML risk or trade-based money laundering, which is related to the letter of credit business, there are serious concerns there in the TBML. Second, certain designated non-financial business and profession, what they call the dealer in precious metals and stone. So DPMS, I guess the acronym, you know, our field is rich in acronyms. Also, there was a gap there in this kind of designated non-financial businesses. That's why the law said that any dealer in precious metal and stone need to take like due diligence and AML CFT measures whenever the transaction on hand is equal or exceed the amount of 55,000 AED. So this is concerning this kind of DNFDP. Another issue is, the UAE is a business hub at the end of the day, linking Asia to the Middle East and to the Europe, to the US, and what have you. So they have like 39 kind of company registries to register the UBO, scattered between the mainland and the free zones. So also this allowed more for concealing ultimate beneficial owner through complex ownership structures. So this was also a shortcoming according to FATF. Now, going back to the provisions of the new AML law, basically it stressed on or put some guidelines for licensed financial institution, what they call LFIs, to have a robust sanction regime and do training for staff, and especially regarding screening, the screening process, so you hedge against any possible sanctioned entity or individuals while processing the transaction. Another thing related to terrorism financing, every FI has to register on a special website, because they will be kind of feeding from this website, which is under maybe the regulator umbrella, to send any changes like listing or delisting happening on the United Nations sanction list, which is the consolidated one. And usually this is related to United Nations Security Council Resolution 1267 for terrorism. So this feeding is reflected on the FI level by doing daily screening to your customer to see if some of them has been listed on the UN Security Council list. And you have to freeze, if you happen to have a correct match, you have to freeze the account and report it to the Central Bank of UAE within 24 hours. What draws my attention here that usually this period is 48 in other jurisdictions. For example, if we take Lebanon, it's 48 hours. It seems there is no tolerance on this anymore in the UAE. It's 24. So basically, these are the major highlights of the new AML-CFT law. And by virtue of its presence as a financial hub in the region and how developed and advanced are the financial markets there and the compliance environment in UAE, I think that maybe many Arab countries or GCC may copy some of these steps to also fortify their regulatory environment regarding anti-financial crime.
Right. Excellent. Thank you so much, Shauki, for joining us today. I actually enjoyed our conversation, learned quite a few new things. You take care, stay safe, and thanks for providing our compliance community with so many inputs.
Thank you, Sharish, for hosting this interview again and for having me. And all the best for you and your organization, and wish you all the best and stay safe.
Thanks, Shauki.